The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, welcome. This fourth day of August, and started off the week a little weak. Dow's down 30, S&P's down just 2. That was some participation of the shorts pushing and pushing last week, and we haven't seen that for a very long time. So let's just go through the numbers now. And first of all, let me just say thanks, John Logan. John starts us off at 8 o'clock in the morning Eastern Time. Comes Steve Rhodes, 2 hours of Steve, and fabulous show. And the most important thing that I can say to you right now is that we're all about education here at TFNN, and we want to provide you with the skill sets that we've developed over the years. We like to educate, and we like to give you the opportunity to study the techniques that we use, etc. So let's just run the numbers, and as I do that, we will also talk about the different techniques that I'm looking at. First of all, we've got the 120-minute chart right here of the E-mini. This is the September future. Look at that rectangle formation, stuck in a rectangle formation between 1910.50 and the high of today of 1927, and I suspect that we will get some kind of a bounce, but what this is telling us now is that the tide that is turned is so powerful that even the normal bounce that should be just a natural incantation of the waveforms that we're looking at right now is having a tough time breaking into the 1930s in the E-minis. And you had a beautiful peak E doji top at 1985.75 right there on the 27th, was it? On the 24th of August. And it certainly came down to 70 points? 75 points, down to the low of 1910.50 on Friday, and even today is struggling. The tide has changed, there's no question about it. How long does it last, etc.? We'll look into different aspects of what would be pertinent. So let's do the numbers, and as I do the numbers, here we go. The Dow INDU. So the Dow right now hasn't taken out the low of Friday. I don't think it should. It should probably try to make an arch formation, a little bounce that goes towards the 16,465 down 27. My suspicion is that at some point this week, early in the week, Tuesday or Wednesday, we should have a bounce that takes it to about 16,590 to 16,630s. That's going to be the big test. Can I get to 16,746, the 9-period moving average? Probably not just yet. Might have to wait to be able to do that. Now, let's say I had a question. I'll deal with this question right now because it was, Basil, the bar at 12 noon on Friday on the E-mini 120-minute chart. Let me just go back to that because I just saw the question, so it looks like a good question. So let me just go to that. The bar was at a trough F. I've got a trough E at 1910.50. What am I looking? Yeah, 1910.50. And then did it just sneak under it? But yes, 1910.25 went to a trough F. Very good. Good eye. I did not see that. Well, of course, if you animate it, it'll show. And what we're looking at here is this is a very familiar pattern. It's like a little flagpole, and now you're getting your arch formation. If, in fact, today the last low of 1914.75 is not taken out, then what I would consider is that you've got a little trough, a little peak A here. I call it gray because it's under the recent major highs. And now you're going to leg B and making a peak B. Anything above 1927 in the E-mini will start leg, if it doesn't take out the low of 1910.25, will in fact start a leg C, all under the auspices of the big spike early in the morning to 1950.50. Sorry, 1932.25. 1932.25 is going to be really important this week because a break above it that holds says you've got a little more room to the upside as the volatility index pulls back. Boy, if you just hang around here and start to go lower down, this will be the first time we're really seeing bear market material where every single rally starts to fail and you close at the low of the day. That's going to be the test. Now let me go back to the charts. You've got the Dow down, what did I say? It was 20-something points. Dow's down only 19, trying to rally. And the way we did it for my subscribers to my opening call, that's my daily service, what we did was, and this is very interesting, I thought it was very interesting, is that we took our profits in the sentiment indicators right now. And one of the reasons why I wanted to do that is because this is the first time really since April that the sentiment indicators have really worked for us very strongly. And to take a 30% off is really nice. I think we can always get back in, even if it's at a different price. But I needed to lock that in just to know that we've got some capital in the game, that we've got a little cushion. And we've kept some of the shorts, but at the same time, we're looking to add more shorts. We did take a long position today, just as a trade, saying if the general market is going to move up, then today's the day that this particular stock should move, and if it moves, it should move quite strongly. In fact, it should be one of the leaders. That made it easy. So let's go on, and we're going to do this. We got the Dow, and I'm giving you the parameters. The weekly chart is just horrible. It's gone to a sell signal to a sell mode in one shot. That was on, especially on Thursday and Friday. And the monthly chart is, as I'm looking at it, this is going to be, I'm pretty sure it's going to be a peak E, but hey, we've only just begun August. I really can't talk about it until the month is finished. But my suspicion is that the month of August is not going to be that good. And here we go, SPX.X. All you need, in fact, to change this whole scenario is to make a nominal new high. In the Dow, it would be above 17,151, and the S&P would be above, even 1 penny above 19,091.39. At 199.1.40, you've got yourself something that's very different. You've extended the monthly and you've recycled the weekly. So that's it. But we've got a doji high on the 24th at a peak E in the daily, and that says, no, no, no. Don't be thinking that you're going to make new highs just yet. There's a consolidation that's taking place, even if there is a bounce right now. Parameters to watch. A close below the low of Friday would, in fact, of course, be very negative. 1916.37 says, hey, we're going to test the 1900. But I'm suspecting that we're going to rather test close, not 1937.35, the high of Friday, but somewhere today in the 1933 area is possible, or early tomorrow morning. And then we see. So let's go to the QQQ series. The QQQ series, nice little bounce here, up 16 cents from the low of Friday. But there's that long-legged doji candle says it's going to be real tough. You've got to spike above 95.34 and do it real quickly, and then close above it for more than 2 out of 3 sessions to really have a chance in this case to go to 95.72, the 9-period moving average. Look at the weekly chart. The weekly chart, not a good-looking chart in terms of the price, but the technical say the MACD is holding well. Stochastic is still holding well. This is still one of the stronger of the indices, and that's very interesting. The QQQ Power Share, QQQ Trust Series ETF, trading at 95.71. I'm sorry, 94.83. 95.71 is a 9-period moving average, exponential moving average. Let's go to the IWM. IWM says, ooh, ugly. Down 31 cents at 110.34. MACD is not very good. Stochastics is not good at all, both in the daily, the weekly, and even now the monthly has started to deteriorate. And I have to tell you, I'm thinking this is a leg F going to a peak F this month in August in the IWM. And that would say, no, no, don't get too excited about any rally in the IWM, because it's going to have to test the 108 to 107 area, major support at some time. Some point in the next week or two. Now let's go to the gold, GCQ14. And what do we have in gold? We have gold working hard, down 250 at 1291. I'm thinking that gold right now is down 5 actually in futures, 1289. I'm thinking that the gold, different contract, I bet. GCZ14. Yeah, down 390, trading at 1290. Not a good-looking chart at this particular point. It better hold. Gold better hold 1280, or else it's going to go quite a bit lower. And the resistance is very strong, the 1290s. all the way to 1300. Now we're going to go to silver. Silver at this particular point is, let me just move this chart so I can read them quickly. Silver is up, no, it's down 6 cents at 20.31. You've got high-grade copper. High-grade copper at this point is in the 3.24 area. You know, high-grade copper has held well. It hasn't shown any signs yet of weakness, and it hasn't really shown a sign of strength over the last week. It's been stuck in the range, but in the weekly chart, it's holding the 9-period moving average. That is a big plus. So I have to consider that it's acting okay right now. Let's go to the TLT. This is really important. TLT was down. Now it's up 8 cents. It's 114.65. Now I have to tell you something. If you look at the bonds, the U.S. continuous contract, this leg E in the weekly chart, all you need in bonds is to squeak above 139 and 3/32, and you've extended this leg E, and you're starting to challenge the downtrend resistance in the weekly chart, in the monthly chart. That's going to be really important. Any close under 130, it's at 138 and 11/32. Any close under 136.5 to 136 in the next week is going to be very negative for bonds. I think the bonds are going to hold in quite well here. And I don't think, we got the dollar DXY, and then we'll start trying to take calls for you. Let me just check here. So we've got, so the dollar the dollar index has made a peak F top at 81.57 on the 31st. But it hasn't pulled back very much, and the weekly chart is still in leg B, acting very well so far. Hey, 2 hours, not even 2 hours into the beginning of the week, but so far the weekly chart is saying, I'm going to hold the 81s, and if I do that, and all I need to do is break above 81.57. If you go to the actual contract itself, it's the September U contract. That's in leg A, B. This is leg B in the daily, and B in the weekly. But it really needs to decisively break above 82 round number high that was made on the 8th. Week of the 8th of November. So dollar's acting quite well, and the euro is acting quite poorly, struggling with the 200-period exponential moving average and way below the 9-period moving average at 1.352. So I think we've covered a huge chunk of stuff right now. What I did want to do is to jump over to the VIX index. As I say, we took really nice gains in the VIX index because it was very powerful in the week in the 120-minute chart. It's a G/C. It was a peak F this morning, but early when we opened, it opened and it spiked a little bit higher. So I'm thinking that in this area here, we should see a pullback, and that the 15 to 14 area is going to be really strong support for the VIX. If it breaks under that, something else is happening. And if it takes out $17, if it goes into the 17s, that volatility index is going to be very impactful for the daily chart. So that's what I'm looking at in terms of the volatility index. Did a nice little study for my subscribers. I thought I sent it out over the weekend. I posted it this morning. I had it all done. I don't know why I didn't check to see if it wasn't. I thought I posted it, but it wasn't. But I did other charts that were very important. Now, we're about to go to a break. I'd love to take your calls at 877-927-6648. And Claw in the Den says, I thought we were supposed to bounce by today. I don't know about by today, but today I am expecting some kind of a rally. We've already had a little rally. I'll be back. We'll talk about my trend gauge.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians. Now we're going to go to Bill in Littleton, Colorado. Hi, Bill. How are you?
Doing really good. How about you?
I'm well, thank you.
Yeah. I would like to check out your reading on Dish Network. DISH.
So now I need to ask you a question. You asked me a question. I'm going to ask you a question. And the question's a very simple one because I've never had Dish, never even considered it because I've always had cable, one in one form or another. And most of the time it's been Comcast. And I do see dishes around. And in those dishes, I always wonder, you know anything about them? You're looking just at the stock, but I just wanted to real quick question is: Do you own it, the dish itself, or do you know anything about it?
I have a family member that owns it, and they actually work for the company.
So it sounds to me like, from what I've read, that when it works and where it works is really important because it gets to places that you really couldn't get to otherwise. And the other thing is that in terms of what they offer, I'm really not sure. I'm not sure how different it is to the others, but they've survived for a very long time. And it seems to me they must have a pretty good product because it's a tough business to be in. So,
yes, it is.
And that shows up in the chart. The chart itself, the monthly chart, I'm busy notating right now. DISH is the symbol. It's trading at 62.15, up a penny. It's really the monthly chart that I'm looking at, because it's the first time that I'm getting negative divergence between the stochastic and the price and the RSI, relative strength in the price, and the MACD is just turning down, but the on-balance volume is turning down, but it's still holding well, and the price is right. It's above the 9-period moving average of 58.81. It's at 62. It's 4 points higher, 3.5 points higher, and the all-time high was made last month at 67.50. So it's really in that range on the monthly. I don't yet see anything in the monthly that says there should be a major turn, but I do see three things that are saying be careful on the shorter term. So you need to go to the shorter term time frames to be able to assess it. Now, there's a chart pattern that I talk about. I just didn't have a chance to finish notating. This is the weekly chart. This pattern that had a spiral to the upside from the week of the 13th of June to the high of the 11th of July to 67.50. I call that a right arm extension in the Chapman wave methodology, and that says in this particular pattern, be careful, because when it turns down, if it breaks under the 9-period moving average and starts to hold underneath there, it could have changed trend. So watch your stochastic and MACD, and they are confirming that this is probably a right arm extension, and that if the low of last week of 60.91 is taken out, this thing could go down quickly to the 58.57 level. And on a bounce, this week is really important, because if it bounces, you want to see it close above the candle high of last week of 63.38. It shouldn't be a big deal for this stock, which has just gone to all-time highs. So if it cannot close in that close to 64 this week, it's going to say, oh, be careful, because the support is starting to fail. And most importantly, the daily chart is saying that the MACD and stochastic are very weak, and that the stochastic had a beautiful rally that should have evolved the price. Instead, the price kept going down. So in a sense, that's a positive divergence, but because there wasn't a reaction in the price, I'm looking at it and saying that 9-period moving average of 62.75 today went to 62.77 is going to be real tough. So if you're asking, are you in the stock at all, or are you just looking to see what you should do?
No, it's the family's in it. The family does own it, yes.
Okay, so let me deal with this, if you don't mind. I'm going to deal with it in a much different way than if someone had just called in and said, would you buy it, would you sell it, what would you do? I'm going to make the recommendation. It's a threefold recommendation, and don't just jump in and do it. Even if it pulls back a little bit, you've got time, because obviously people have had this as long term. I don't want one little word from me to change your long-term perspectives as a family, because you're involved in it in a different way to me. But I'm going to give you the price levels that I would be looking at to say, this is where I would lighten up, this is where I would add, and if it doesn't hold, I would start to lighten up even more. So here we go. Number one is on the shorter term, the way it's bouncing right now, it's attempting to have the bounce that I was expecting in the marketplace itself. So if Dish is able to close any between now and Wednesday at 2 to 3 o'clock in the afternoon, if it's able at any point to pop above 63.20, I'm going to recommend, we've got a break coming up. You know what? That'll just give me enough time to articulate my thoughts, so that when we get back, I can just run through all my points, if you don't mind holding.
Oh, yes.
Okay, Bill in Littleton, Colorado is holding. I've got Dan Baskin Ridge holding, and I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Dow's only now down 1, and the S&P's up 252. Oops, the Dow's now about positive. That's what we wanted. Now, this is what I'm looking at. We're on with Bill in Littleton, Colorado. We're looking at Dish Networks. I'm pleased I had that break because it absolutely confirmed for me that that was a right arm extension in the Chapman wave. The rally that went into the week of the 11th of July, 67.50 all-time high. Let me just show you this chart long term. Never finished notating this. It's ABCD. The monthly chart has gone to D. I did finish that. And the 58.80 is the 9-period exponential moving average. So here's my recommendation. This is just based on my assessment of the aspect that this is like a family situation where people have positions, and that you would like to keep it as long as possible. You would like not to get trapped in any down move that takes place that really wipes out a big chunk of the gains. At the same time, you don't want to get out early. Is that a correct assessment, Bill?
Yeah, I think that was pretty accurate.
Okay, so then let's do this. My recommendation is right now at 62.06 is, and I don't even know if you guys want to split this up because of tax reasons and all sorts of things, but this is my thinking. Right here, even if there is a pop-up of about 1.5 to 2 points, I think it's in what I call a digestive period. At least it's a digestive period between about 64 something and probably 58. If it takes out 58 support and goes below that, then I'd get a lot more nervous about it. So here's my recommendation. Think about it. You don't have to do it today. You could do it in the next couple of days, but talk it through and see if you're comfortable with it. I would take off a little bit right now for two reasons. One is it's gone to all-time highs. The general market is starting to have a tough time. I think that we're in a big consolidation phase. It might be worse, but I'm calling it right now consolidation phase. And every stock should be impacted unless there's something real special going on. There could be takeover rumors, anything with Dish, so I don't know, Dish Networks. So here's my recommendation. Take something off right now. It could be now or even in a rally that goes to the 63 or 64 area, but at least reward yourselves for being patient. And that's money that you would like to put back at some point, right? Now the nervous part of it is that if it's at 62.04, if it starts to take out 61 to 60 as a support level, that 58 area is going to be very important. Why? Because if it starts to trade under the 58 area, then all of a sudden, for the first time since it took out in the monthly, this is an amazing thing, in the monthly chart, since it broke above the 9-period moving average back in December of 2011, this stock hasn't once closed under, not once has it closed under the 9-period moving average. I'm going to take that back. It did just for a very brief moment in May of 2012, but it quickly rectified that. So this is, I don't want to mess with a chart that's looking so strong, except to say that it's important that you take a little bit off in this phase because at least you're going to benefit from the gain. That's number one. And secondly, that is money that you might want to put back if the general market does take a breather, and yet this actually holds between 58 and even 56 on any bigger market pullback, because you'll say to yourself, hey, it's held this well, the next rally in the market should include Dish. And if Dish starts to take out 58, closes under it, I'm going to recommend you call me. Let's do this again. But I would definitely say to you, if it closes under 60, you might want to take another little bit off. Not a big chunk, just a little bit off, and then let's see how the 58 holds. So that's the way I'm looking at it. And if you're wrong and it goes to 66, that's fantastic. You took a little bit off and you got all that money back because it's going even higher. I hope that helps you.
I think that sounds really good. We'll talk that over and make a decision on that advice. So I think that's pretty good.
Thank you very much. And just let me know how it's going, and I'll keep it on my radar here. And that's number one. And number two is, if it does take out the 61 or 60, that kind of support area, give me a call to remind me, and we'll look at it again, okay?
Sounds good. Thank you.
Thank you so much for calling. I appreciate it. Let's go straight to, do we have Dan in Baskin Ridge?
Yes,
yeah, hi, Dan. How are you?
Doing well, Basil.
Good.
One thing I was a bit puzzled by, and I guess I was just kind of anticipating a bounce, was that both the SMHs and IBB did not have that that big drop on Friday.
Right.
And I was looking to get into both of those, and so I cleared up both short positions this morning. And I was wondering, at least on SMH, do you think we could get back up to about 50 and change?
Okay, this is a great question, and why? Because it's extremely timely that the two sectors that I think are really important right now in terms of saying we have been winners all the way through into 2014, right through the middle of the year, into April for the IBB, but the SMH has continued higher right up until mid-July. They went to 51.17. That's the market vector semiconductor ETF. Now what? Well, what happens is on any bounce, the fund managers that have been rewarded so well by buying every single dip, that is a very difficult habit to break. There's no mental pyrotechnics that you can just pop a pill that says, okay, we're going downhill now. Stop that positive thinking. It's got to be negative. It takes a lot of hurt of being wrong, just as what it was for being short. In this case, it's if you're buying the SMHs and at 48.94, you suddenly see them drop to 48 to 47. That's going to be the first time that you've had this kind of duration and time failure, having made a new all-time high. So I'm going to suggest two things. One is that in the SMHs, you see the way it rallied today? There was an open and it spiked higher, but it actually, the opening price was 49.25. The high was 49.25, and now it's at 48.94. Not a big deal, 30 cents. What's 30 cents? It's not the point. The point is that this is one of those sectors, the semiconductor ETF, that on every single dip for a year and a half to 2 years now, it's been the perfect thing to buy because it went even higher. Now you've got a change of trend in the MACD, the slow stochastic in the MACD, in the daily chart. You've made an arch formation. You made an alternate wave peak, I call it the rogue wave at 51.17. And that very often says, the rogue wave says that once you make that, you should pull back, go back to the down mode and go for at least 6 to 7 sessions before there's a very strong rally. And we'll see if the strong rally is going to unfold right now. So now I'm going to make a suggestion, because now this is a completely different play to what we were looking in Dish. Here I'm going to make the suggestion that you could implement some kind of a short position. Are you going to use options or actual short or the SOXS?
The SOXs.
Okay, so if you're going to do that, then it's a different ball game because of the volatility involved and the percentages. You see, one of the reasons why I didn't want to do anything today is I think I've got a leg D going to a peak D in the daily of the SOXS. The SOXS is the let me just tell folks who are maybe not in front of their computers. Direction daily semiconductor bear, 300% short the SMHs. So that means it's a different kind of vehicle. I've tried, one of the reasons why I got out of some of our positions is that some of the ETFs, when they've done their job, they could diminish, the premium could shrink very quickly, especially if they're 200 and 300%. So what I have for my subscribers, we've gone a little cautious in terms of the selection of what we're getting, because I would like to hold them more longer term. I don't want that shrinking premium every day at the end of the day. But at the same time, I'm quite prepared to go to something like an SOXS, which is the 300% short the SOX index. Why? Because the weekly chart is if you were a bull and this looked like a bullish chart, you'd say, what a spectacular leg A, and this is the very week, this is the very day that you would expect a gap down and to have a test of what I call the single leg A failure syndrome. Instead, it's holding beautifully above 2168, the 9-period moving average. So here's my recommendation, because I know that you look at this very closely and you'll be able to monitor it very well. I'm going to make the suggestion that if you want, you could just nibble on the SOXS right now at 22.25, realizing that the best price would be a drop between 21.46 to 21.05, and preferably a tad below 21, just because of risk reward. But once the momentum is changed in one of the major arteries of the body of this market, and in this case we're talking about the semiconductors and we're talking about the biotechs, that bleeding should I don't want to get into this, forget about the bleeding. that drain on energy should last a long time, at least weeks and weeks. So I'm going to suggest you could nibble on it now. Why? Because there could be a pop-up above Friday's high of 22.84, and even then you could have a high-level consolidation. All it would do then is raise the base if it made a new recovery high. I suspect that it's just like the first position. The real position, if you had a choice, would be to buy it instead of at 22.29, to buy it between 21.60 and 21.20 and have a 1 to a 1.25 point, a 5% stop on that position. So, and to concur with what I'm saying is that you got peak C, D, E, and then it ran to, this is EF/B in the 120-minute chart. It's holding pretty darn well right now. There is a chance that it could actually go above 22.84. That's the reason why I'd say, so a little position here. Realize that you might be vulnerable to about 60 to 70 cents. The best position would be below 21.50, let's say. Okay. So I hope that helps you. And yes, I do believe, because I'm talking like this, I do believe that the SMHs are going to be pulling back more, that the left side, right side price time match has been achieved, that the MACD says, yep, you might be able to rally a little bit, but that the weekly chart, which has not yet crossed negative in the MACD, I think it will. And if there's a close and the SMH is below $49, I'm sorry, not 49, I meant $48, 48.47 was the low last week. If you get a close below that, I'm giving you a little room, I'm saying $48 this week on Friday, I think that the monthly chart might turn out to be a leg F going to a peak F with all the resistance. Everything about it says it's accomplished what we were looking for, and it should pull back. So I hope that helps you with the SMHs, Dan.
Yeah, very good. Thanks, Basil.
Thank you very much for calling. I always appreciate it. So I had a question about the XLF. Actually, a whole bunch of questions. I didn't manage to get to all of them. Got a little grandkid babysitting going on right now, which is always a lot of fun. So 2307 was the XLF, the S&P Select Financial Spider ETF high of the 3rd of July, 2307. Pulls back. Retest that by going to 2306. 1 penny in the Chapman wave makes a difference, and in this particular instance, it means that you made a double top, and that double top says if you go 50% below the left side lip to the bottom cup, in this case the bottom cup of 2246 on the 10th of July, if you go halfway, if you close halfway below, you should in fact retest the low, and it not only retested the low of 2246, it smashed right through it Thursday and Friday, and it went down to 22.12. That's the XLF daily. Daily is in a very a poor technical condition, but the 120-minute chart said, yeah, you could have a little bit of a bounce, but if you fail to bounce, it's not going to be just important after that double peak D-top in the 120-minute chart. It says you got to be really careful because strength, a modicum of strength is turning into greater swaths of selling pressure. And because of it, it says that the XLF weekly chart is probably making a peak D of significance at 2307, and that there's a real good chance we're going to go into the 21s very soon. Now, the big thing for me was the alternative wave count in the monthly chart. But it reached the left side goal. I hope I can stress this. There you are. I had made the bar of May of 2008 with 2817 a high of significance. I had also made the bar of the 9th of September of 2008 at 2450, a bar of significance, and I drew a sideways left side, right side price time match, and it extended out even more. I used the little doji candle, tiny little doji of April of 2011, but in fact, it hasn't worked. It went to the price. What was the high, most recent high? Most recent high was 2307. So 2307 is underneath the 2450 high. And I did say right there, 2309, that little bar, that's where I actually drew it from. We're in the area of resistance, number one. Number two is the XLF. For years now, we've been looking at the XLF and saying, it is very important, but perhaps it was way less important than we thought. But now I think it's going to be telling us something. And what it's going to be telling us is going to be telling us a little bit about expectations of interest rates and a whole bunch of things. So I'm going to try to tie this together in the remaining time we have because we've got a break coming up. And I do want to go for 1 second to the 120-minute chart to show the bounce that's occurred is it's kind of feeble. But even more important, I want to go to a chart of bonds, the weekly chart of bonds. I want to show something. I want to try it together because if rates go up, usually the banks benefit a lot. I'll be right back. Basil Chapman, Dow is down 7, S&P's at the dollar report.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I did want to get to the questions that I was asked. And I've got the bond chart up in the background, but I just wanted to do this to show. Let's see. Hello, Mr. Chapman. I just subscribed to your newsletter. I do not yet know your system. I would like to ask a question, however. In previous market corrections, especially 2011, would your system and principles alert you to the quick decline that took place? The S&P dropped approximately 18% in 10 trading days. Thank you. So now let me just talk to. I've had a number of questions like this, and usually I'm going to get to it, and then I don't. Let me just do it right now. The doji top. First of all, in the Chapman Wave methodology, what you look for is the most identifiable low bar to start a wave count, if it's possible. And then once you get that, you look for Ds. And Ds you can see in this chart of the daily chart. Back in March of 2010, March of the 3rd, there was a Chapman wave instant restart. That's my CD introducing the Chapman wave methodology. It goes A, B, C, D. Then it goes almost the same thing, but it wasn't quite a restart. It was a sell signal, sell mode, and then a buy signal, and it goes up, and it goes hugging the 9-period moving average. Remember, I talked about this. I said I'm finding in the divergence, and then we got that sell signal with a doji close and another peak D, the third one in a row with a doji close right on the 26th of April. 11,258 was the high. Now, if I didn't have time to go through my notes, but if my waveform was correct, I think we got short the DXD, but it was later as it was dropping. So we didn't get the full benefit, but we were on the right side, I believe, of the move. And I believe we also had a couple of longs, but mostly we were looking for the short side. We got the short side with the indexes. So that's the way it works. And sometimes getting the position, putting it on, is a little early. Sometimes I'm a little early for that. But I like to go starting at Ds, where I start to look for that, going to highs, especially all-time highs in the Dow. And then, of course, we pull back very sharply to the 90 almost the 9,600 area. So what I'm looking at is the next thing is, so that was the answer. And the answer is yes. That doesn't mean to say that all the positions were just fantastic because I nailed it. Sometimes I'm a little early, sometimes a little late, and sometimes we just miss getting into the thing by pennies sometimes, and it moves. That's just the way it is. So the answer to your question is yes, the technique was correct. I just can't remember offhand exactly all the positions, but I do know that we were in one of the successful positions using, I believe it was, the DXD 200% short the Dow. Now look at the bonds, the weekly chart of bonds. This is the three yields, the 30-year, the 10-year note, and the 5-year note. And look at this. We made a trough F, but we are still hugging towards the bottom of this. The 10-year is pulled back. So I'm looking at this and I'm saying, okay, watch bonds really closely. So as we're about to wrap up, I'm about to hand you over to another great show. This is with Larry Pesavento. Let me just do this for a moment, and I'm going to say to you, we are looking at the VIX index, VIX.X, that's how I get it. Of course, I typed it in incorrectly. VIX.X. If the VIX doesn't actually pull back very much and then starts to go to the 17, 18 area, this market is just going down now. It's not going to wait for any bounces, and bounces will be very short, number one. Number two is, I think that we will get an opportunity with the VIX going into the 15 to 14 area to possibly get back into that short position. We do hold some, but we gave up most of we took most of the profits, really nice profits. Okay, now the Dow itself, INDU. The Dow, I'm suspecting, has a little bit of a bounce here, but the 16,292 200-period exponential moving average, that is going to be in the cards. We'll see what we have. So we've got Larry Pesavento, trade what you see coming up. And as we're about to go out, I'm anticipating a little bit of a rally towards the 16,000 or maybe the 570, 590s if everything works out. If it can't get there, that's very negative. We've changed the tide in any case, but the tide will be receding very quickly if rallies can't hold. So I am still negative. We do have a long position that's actually working beautifully right now, but that's because we are trading one of the best stocks on the market at this particular point. Hey, have a wonderful day. I'll see you back here tomorrow, and enjoy Larry and all the other shows coming up.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.